Well, the economy, of course, as you know, has been struggling for months. Jobs have disappeared by the thousands. But now it's official. The recession in Canada is over, according to the Bank of Canada. Bank of Canada Governor Mark Carney says our economy will begin growing this summer following 9 months of economic stagnation. Canada is predicted to lead most of the industrialized world next year. However, many economists cautioning this rosy outlook won't lead to job growth until much later, when companies regain confidence and begin hiring again. Well, the Governor of Bank of Canada all but said Canada's recession is over. What does this really mean, and does it mean things like more folks returning to work soon? For those answers to those questions and more, we welcome Tom Vassos. He is a professor at the Rotman School of Management. Mr. Vassos, first of all, what exactly is the Bank of Canada governor saying with his comments? Are we right that he's signaling Canada's recession dead?
Well, what he's suggesting is that it looks like this quarter that we will have a positive growth in GDP. I find it interesting, though, it takes us at least 2 quarters of a drop in GDP to announce a recession, but just the likelihood of a single quarter to say, okay, we're out of the clear now, which is hard to believe.
So what do you think when you read the tea leaves? Do you think we're out of this recession?
Well, put this way, a couple of things to look at. One, if you think about it, growth in GDP is simply saying that we've grown a little bit from the significant drop we've had over the last couple of quarters. So we're certainly not back to where we were even 6 or 9 months ago.
And when we're talking about the GDP, that's only one of many indicators that gets evaluated when they're deciding what our health is, right?
Exactly. So if you look at the unemployment numbers, so we just lost 56,000 jobs last month, and a lot of those jobs were full-time jobs replaced by part-time jobs, so there's less security in those jobs, and quite often, even when the GDP rises and the recession can be, quote, announced as over, it still could take several months, if not quarters, to see those unemployment numbers rise again.
Is that the crescendo effect that comes from a lagging indicator like unemployment?
Absolutely. In fact, we also have to look at how are we doing relative to our biggest trading partner, where 75% of our trades go. I mean, the U.S. is now at 9.5% unemployment, but it's looking like most economists saying it's going to peak out at like 12%. So certainly we're going to feel some effects of that rising unemployment rate in the U.S.
Right, 12 in the U.S., 10 here in Canada. How long do you think the average folks, before they start coming back to work? Is it going to take the kind of confidence that companies say they need to have, or will it be something else that brings folks back in?
It's going to be very uneven, Brad. So if you look at it, Martin Prosperity Institute just released some research that shows how uneven this unemployment picture is. They looked at the working class, blue-collar jobs, service class, which is more restaurant workers and things like that, and finally the creative class, like nurses and IT workers and things like that. The working class has an unemployment rate of 15.2%. The service class at about 9%, but the creative class unemployment rate's only at about 4.4%. So you can see this huge discrepancy between those different types of jobs and the people with those skills and the university degrees, etc., not feeling the effects as much and getting out of the recession much more quickly.
And then you also add in the regional disparities as well.
Yeah, so regional disparities, especially when we look at unemployment rates in Toronto and Ontario at 9.5% versus 5 or 6% out in Alberta versus 3 or 4 to 5% in the prairies. And so we've got those discrepancies as well. But also look at the types of jobs, as I mentioned, those creative class workers. The Sapphire IBM Canadian IT staffing outlook that's just going to be released next month, it's also suggesting that about 40% of the companies out there are going to be hiring full-time IT positions both next quarter and next year. So once again, you see the strength in certain sectors like that.
All right, so if I'm thinking of job retraining, what would I be aiming toward as a job that I might go for here?
Well, for example, if you look at it, within the IT staffing survey, 2 of the jobs that came up very high are project management and business analysts, for example. And so we look at skills like project management as being a skill that can be really used across a broad range of jobs.
Before I let you go, I've only got a couple of seconds left, but I want to talk about the Canadian dollar. It's rising again today. Do you think foreign investors encouraged by Canada's economy, particularly the Bank of Canada, the governor's announcement, will come in and drive up the value of the Canadian dollar and by extension then threaten our economy and its economic recovery?
To some degree, especially the manufacturing sector. So the manufacturing sector is already reeling. Last quarter, another 34,000 manufacturing jobs lost in Ontario and Quebec. And so you see these significant numbers. I mean, we've got this powerhouse out there called China that's just doing an incredible job in gaining market share in the manufacturing sector. So the real question is, will those jobs ever come back? The Martin Prosperity Institute suggests many of those manufacturing jobs won't come back, and we have to look at how we transition our workforce to these creative class jobs.
By the same extension, with that point, China is also going to have billions and billions of dollars that it's going to now be looking for a place to invest. Places like Canada, right?
Absolutely. And as they look to broaden their portfolio of the kinds of money that they hold away from just the U.S. dollar, I think Canada is going to be a great alternative for those Chinese companies and the Chinese government.
Mr. Vassos, good talking to you.
Thanks, Brad.
Tom Vassos with the Watman School of Management. The